General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, so where are we at? Yes, week 5. Tuesday, 5/27/25. I'm gonna try to do that. Let's get this screen grabber thing. Okay. Forex Factory. Okay, tomorrow's FOMC minutes. So we got 10 a.m. and 2 p.m. 10 a.m. and 2 p.m. News. Let's see. I doubt it. The CME Fed watch change. I don't think it was that much of a surprise. Yeah, we're still at 94%. Let's see what the 30th of July is looking like. 74%. Pretty much locked in, no change. For June 18th. We'll see what NFP does next week. Let's get here. The 30th of July. July is at 74%. No change. Start monitoring. Next Fed meeting to see if news will push it to rate cuts. Tomorrow's a big day for earnings because we got Nvidia, which is like number 2. Salesforce is a pretty big company, but I don't think it's going to be moving. All eyes are going to be on Nvidia. All eyes on Nvidia tomorrow. Dollar on the daily. Let's go to here. See what we got. We do have a flat top on the weekly. I doubt we'll go up there though. I'm watching this daily order block. That's the flat top up here. You could say, oh, we closed above this, but this is normal. Here. Yeah, we already wicked this. I might get a daily order block, daily bearish order B, spike up for FOMC minutes, and then drop back down. Today on NASDAQ, go to the hour. Okay, we didn't go to EQ of this. I'm glad this actually is marking out that area, because this covers the opening. So this is target hit, and we came up to 2025 open price. We're using that as a key level. We respected it today. One-sided delivery. I saw liquidity run up to 2025 open price. Let's go here so I can see what we did. We took last year's low. Q1. We left EQ of this. It's nice. Go to the weekly. So we closed above here. Let me take this off or put this here. Top left. This says previous week's open price. Here. Closed above that. This could be the run. We need to watch this as well from where we swept. This old weekly high. We still didn't hit 50% of that, but still, let's go here. That's the range that we're working with. Nice premium run today. Will NVIDIA push us to all-time high? I'm looking for sales. Still, my validation point is the old weekly high. Hold up. Okay. Yep, so that's my validation point. Let's go here. You know what's crazy is the amount of lines on my lower time frame. This has got wick. We got bodies out here, bodies out here. We could run this. We really could. This didn't provide any type of balanced range to say this is where we're gonna stop. This still needs a down candle here. And we do have, what's this? A daily fair value gap here. And I believe this is like a fair swing from a long time ago. Yeah, just an old daily high. And this is CE of that wick, I believe. It's the weekly. Yeah, go to daily. It's right here. Yep. Interesting that we didn't close above that 2025 open price. This high's already been stop hunted, so I don't think we need another stop hunt. I still think down is going to be a direction. As far as draw on liquidity here, like we do have a fair swing here because that failed to take that. We already smacked this. If we do break over that, this will be the next level to look at. We can't neglect the fact that this candle slammed through two candles. Just this candle to sell, we closed below this open price, but we didn't slam through. We don't have a Larry Williams smash day candle to the downside. But we do have a retracement seen here and a pushback up because this fair value gap held. Daily is looking like it wants this failure swing though. I can't even lie. And NVIDIA should be earnings. Like I don't know. Maybe they missed by like 5,000 on a $10 million estimate, or 10 billion really. Order flow was bullish. We got closer, down candles. Um, going to wait for a sale. If we break and close above a weekly high level, my idea is invalidated. Okay, I just freestyled the end of that because I didn't know where I was at in the word. Ideal delivery would be a sweep above today's candle high and a sell to the bottom. You notice also that they put Monday and Tuesday together. This is not just one day. See, it's Friday, Monday, and Tuesday. Trading View does that with futures. Matter of fact, let me go look at US 100 because at least they'll tell the truth. This is what the candle looks like. So here, Monday, 17. Yeah. So let's go here. It's Monday's range. This will be Tuesday's open price. It's not too cluttered here either. We don't like cluttery charts. This daily fairy swing is not previous week's high. That's why it's called a fairy swing, because it didn't take it. From here, what is interesting, this candle does have a wick, even though it's little. From here, what's interesting? Nothing at all. Even here, we don't have any closures from here. You can form fit and say, this can be an order block because we closed below this, but this candle didn't really take liquidity to me. So I wouldn't even mark it. Look at this month candle though. Crazy. Yeah. The fairy swing does look probable. The way we're slowing down here, I could still expect us to close back below this, but we're still in this previous week's range. It's the only key level I see here. Because it's liquidity. Daily failure swing liquidity. It's the only true untapped liquidity level I see next. After that, it's previous week high. Sell side liquidity is more appealing since we are trading at a premium. Excuse me. Let's go to H1. We could take this off. We could take this off. Keep it clean. All right, that's not bad. Week open up, push down. Yeah. I think I'm gonna set an alert at old weekly high. That'd be a good time to start stalking. Create. Yeah, it's interesting. Yeah, that covers that whole day. Yeah, we could change this to white on white or something. No, that's too much. Let's make it yellow. This will be the range I trade. No matter what, run up. I'm looking for this to get ran again. Even though we ran the technical start of the thing, this technical start of this day, which is what I honestly don't know why this line is here, because it's not 17, this is 18. This is 17. This line should be right here. So it looks like we ran a key level, but this should actually be here. And I think I didn't code that indicator. That's daily, weekly, monthly levels. That's what that is. That's doing that. I probably should make my own, but okay. Okay. Looking for Monday's low. Have to run off by side. Alert set. Well, alert set at old weekly high to see if we get a CSD above this level. Plan is to wait. Target is previous day high. So sit in my hands and wait for structure to shift bearish. Support this to the journal and Telegram. All right, that's that on that. Y'all have a good day. Peace.